Hello and welcome to today's community event. Happy Thursday to all of us. Hope you are all doing fantastic. Welcome to today's community event. We are very thrilled to have you all here with us today. Welcome. If you're tuning in for the first time, we always have these Thursday sessions on a weekly basis, same time. We lay emphasis on education. So we have multiple events on various platforms such as YouTube on Thursdays, Saturdays, and Mondays we're on Twitter. We host a space, and then we have Wednesdays where we are on Facebook, and then we also have Fridays and Sundays strictly for the Queens exclusively, also on Zoom, and then we also daily on Zoom as well. So as you see, we are a very active community, and we lay emphasis on clear communication to be informed and educated, and we have that platform where we can socialize, interact, and grow together in terms of being informed and being educated. So if you're tuning in for the first time, welcome. Feel right at home. And for those that are tuning in consistently and part of the community already, we're always very thrilled and excited to have you with us, of course. So with that said, community, as you see the title, the new monetary system, it's very important for us to understand how our monetary system works. Oftentimes, even though finance or financial education is key in our daily lives, it's often the part that is mostly not educated about, right? It's not talked about mostly, maybe because it's just a boring subject or it's just nothing of interest. However, it's very important for us to understand these topics, and they're really much simpler than it may sound, right? They're really very basic, very simple, and we always aim to explain these topics as simple as possible, make real world examples so that we're all on the same page. So today's topic is the new monetary system. In order to understand what the new monetary system is, we still, first of all, would have to understand, well, what's the current one, right? Or what's the old one, I should say, because currently there is already in progress to be another one. We are already in that transition. So before we jump headfirst into today's topic, let's take a step back. We have daily activities, as we know, and that's Twitter. Why do we do that? Is to bring awareness to our industry and to also highlight how we are addressing the challenges that we find in our industry and use the latest technology, the blockchain technology, to address these challenges we see or we identify in the industry. And we use our platform, our ecosystem to address those four challenges, which is lack of liquidity, inflation, unsustainable staking distributions, and inefficient use of volume. So to do that and to embrace that and to make sure that we bring awareness, we do tweets every single day. That's our community event that we do. That's a community activity that we all do, from the ones that prepare the banners to the ones that actually tweet the tweet out. And then we, by us engaging, by liking, commenting, and retweeting these posts, it goes a very long way and it takes very little effort. With that said, those who have not yet, let's ensure that we all engage with the tweet so that we can push them out as much as possible and they can reach as many people as possible. The point here is to bring awareness to the crypto industry that we are so passionate about, and also to highlight the challenges we face in the industry and how we are looking at those challenges as an opportunity, turn those opportunities into real solutions, and deployed and developed an ecosystem, a platform known as the BULLRUN ecosystem to address those challenges. With all of this said, I appreciate all your comments. So we'll get to all of them at the end of today's session. So let's be sure to ask anything as we progress throughout today's session, or if you have any feedbacks, feel free to add them as we progress, and we'll come back full circle at the end and then address every single comment of yours. You're all very much appreciated. We are very happy and delighted to have you here with us today. With that said, let's jump headfirst to today's session. As always, we always like to, first of all, kickstart with the market. Let's have an overview of what's happening in the market. If I refresh, as we see here, we're up barely 2% for within the last 24 hours. It seems like a green market. Bitcoin, as we see, is up 85. Ethereum is up 60, over 1600. What's important here is not the price, but the sentiment, as we see here on the top right. It's at 30. The fear and greed index, it's at 30%. So that usually gives us the temperature of the sentiment of the economy, of the industry. And this is because we are in a very sentiment-driven industry where just one tweet can move markets, right, in an instant. And this is where we find ourselves. And having such a young new asset class known as the cryptocurrency asset class that has low liquidity so far, other assets can move this industry so quickly up and down depending on the sentiment and emotions, right? So to keep our emotions in check, this is why it's so important to be up to date, to be informed, to be educated, and this is what this platform and this community is all about. With that said, community, let's get into current events, what's happening right now, and then let's move forward as we progress. Keep in mind, today's topic is the new monetary system, right? The new monetary system. Just to recap, what is the current monetary system? Current monetary system is the one that is based on fiat, right? It's based on fiat, and meaning since 1971, when the US went off the gold standard, meaning the US wasn't backed by gold anymore, like in 1944 initially implemented and backed by 44 other nations, because coming out of World War II, as we know, the US had previously the majority of the global gold reserve, and then it was identified to be the global reserve currencies from then on forward, being the ones that holds the most global reserve currencies. Gold reserve, right? So moving forward in 1971, that was taken off by President Nixon at that time, because the US was just printing more fiat than it had the golds backing it, right? Gold reserves backing it. So this is how they backtracked, and then since then, US dollar and other fiat currencies were off the gold standard, and this is how inflation, now this is the current monetary system we're in. It's inflation driven, it's debt driven. Without debt, the markets can't be triggered, can't be stimulated, because each time the markets need to be stimulated, two things need to meet. Interest rates need to be low, and also fiat needs to be printed. So those are the two requirements that usually have to be met in order for liquidity to enter the space, the industry, the economy, right? So, and this is the current monetary system we're in. It's debt-based, and to stimulate it, you need to print more fiat. This causes inflation, and this also raises the debt ceiling even further. That's the current monetary system we're in. So what is the new monetary system? Let's start there. So right now, there's two alliances right now. One is known as SWIFT. This is the one that we're in right now. It's mainly dominated by the West, mainly by the US. And now there's a new one emerging known as the BRICS, right? Which it's represented by 5 major nations. Now, actually, as we will see in our second step article, it's actually there are 6 full members now, not just the BRICS, but there's a new one that was added also. But as of now, right now, for this article, it's BRICS, meaning Brazil, Russia, India, China, and South Africa. So they are also forming a network, an alliance amongst themselves. And as we progress, we'll understand why, right? So anyway, BRICS now, they are expected to come up, or they're actually coming up already with they already launched a payment network, right? And the aim now is not to restrict it just for the member states, however, to open it to go so that it can go global. So anybody that wants, any member state that wants to be part of it, it's open for them to participate, right? So right now, as we speak, in the current monetary system, SWIFT has been literally having, hands down, a monopoly, and it's not been having any challenges whatsoever. Everything has been going through SWIFT, and it's an interbank messaging system. Don't worry, we'll get to it as we progress, right? So let's walk through this together, step by step. It's important to understand every step as we progress. We're talking about the new monetary system that is about to get into place, and actually, as we speak, is already being implemented. So far, so good. So, like we said, BRICS, they are accelerating to break from the Western financial dominance, like we said, with a new game-changing payment system that could soon welcome non-members, like we said, and this is going to obviously challenge SWIFT's global stronghold that they've been enjoying a monopoly so far, right? So this is something that is new. It's coming in. It's been in the works for many, many years, and we'll soon identify why is all of this happening even in the first place, right? So what we need to understand here, takeaway, is this. So, like we said, let's look at this as an alternative. Like, this is an alternative system, such as SWIFT, right? And this is, like we said, largely controlled by the Western financial authorities. And the reason why they're implementing it is because due to all these geopolitical tensions that are happening and global economic realignments that need to take shape, right? All these global uncertainties, all these tariffs we are hearing about right now, and all these threats and freezing assets, this caused a lot of uncertainties to nation states, and now they're looking for an alternative to SWIFT. And this is where the BRICS payment system comes into play. Let's look at it even further. If we go even further, there's a new official, so Indonesia right now officially joins BRICS, like we said, as a full member, right? So far, it's been only BRICS, but now Indonesia is now part of the BRICS now, as a full member, not just as a member country state, but as a full member now, right? So right now, like we said, it used to be just the BRICS, Brazil, Russia, India, China, and South Africa, but now officially added as a full member, Indonesia also is in. Why is this so significant? It's because Indonesia is a South Asian giant, right? And it has a very large economy as well, as we will see. And before we get fully into Indonesia, let's also see the current, like we said, Brazil, Russia, India, China, South Africa, and also newer members that just joined are Egypt, Ethiopia, Iran, UAE, United Arab Emirates, and Saudi Arabia. You notice that these are very mineral-rich nations, very mineral-rich, very resourceful, and they're all emerging markets, right? They're not fully developed yet. So there's so much room for growth, so much potential, and they trading together is a big deal. But let's continue. So Indonesia had been having interest in all of this for years now, and finally they made the bold step, and now they managed to be not just a member, but a full member amongst the BRICS, right? So like we said, with Indonesia, BRICS now boasts some of the fastest growing economies on the planet, like we said. And this is very important to understand. So these are actually economies that are still developing and have major growth potential as well. So also, Indonesia already has an economy valued at roughly $1 trillion. So that's a very large economy in comparison, one of the largest actually. And this is what it specializes in. Of course, trade, manufacturing, and like we said, natural resources. Most of the BRICS nations have exactly this. They are very rich in natural resources, but most of them are not even into manufacturing yet. Mostly what they do, they take their natural resources and export them, and then buy back the processed or added value, the products that have been added value to through their own natural resources, right? And this is exactly the shift that is about to take place with these developing nations, that now they're going to shift gears and get into manufacturing, meaning that they will not be just exporting natural resources, but rather they'll be more into trading amongst themselves using their BRICS payment system, and also adding more value to their natural resources instead of just directly importing, or rather exporting their natural resources, right? This will make them, of course, very valuable player for the block, right? So another thing that we need to understand here is that there's this thing known as de-dollarization. This word is loosely used, very loosely, and it always sounds like BRICS are the ones that are the victor, right? They are the rebellious ones, right? However, the way this works is they just want to have an alternative so that they don't have to worry about their assets being sanctioned and their assets being frozen, and having to worry about all of these things that geopolitics people are experiencing, nations are experiencing right now in the geopolitics. So with all of that said, what we need to understand and take away from here is that let's look at BRICS as an alternative to SWIFT. SWIFT is the existing, current part of the current monetary system. This is what we need to understand, right? But BRICS is designed to allow member countries to settle trade using their own local currencies. That's the main point. They want to be able to use their own local currencies so that they can fight or handle or manage inflation of their own currencies, right? Because if you keep printing your own currency to buy the dollar to trade, and you always keep weakening your local currency. So they want to help themselves to strengthen their local currency by being able to trade with their own local currencies amongst themselves, right? That's the whole idea. So another thing is also that the BRICS are using the blockchain, right? They're using blockchain technology. And like we've been discussing so many times, crypto is more than just flipping cryptocurrencies. This is about technology. And this is one of the major use cases that we see here in full display. So what they're also trying to do is they are considering creating a new reserve currency, one neutral one, right? Known as the unit so far. And this should be backed by a basket of member currencies, right? And possibly gold. So this unit, this new currency, will be backed by the member states' currencies of the BRICS members. So it will give the BRICS members local currencies a use case, not just to print more and buy dollars with them, but actually they could literally be used to back this one neutral unit, and use that neutral unit as the medium of exchange amongst themselves. So the best example here is, for example, like we see here, India. They have already been leading the charge in local currency trade agreements. So they've already sealed deals with over 22 nations, which allows trade in domestic currencies instead of the dollar. So as we know, India is one of the BRICS members, like we say, and they are a developing country, and they already sealed the deal with 22 nations so that they can be trading with their own local currency. This will not just strengthen their local currency, but it also causes demand for their bonds, right? So meaning that foreign nations that want to trade with India would be forced to first buy their rupees, right? The Indian local currencies, and then trade. So it will bring demand for the bond market for India, for example, and it strengthens also their local fiat currency, and it hedges it from inflation. And this is the whole idea of the BRICS. They want to help themselves and have an alternative to SWIFT. That's basically it. That's what we need to take away from here, right? And moving on, another thing that we also need to understand is that the BRICS nations now also represent over 51% of the global population. So no more is it just this small side project of China, right? Or Russia or Brazil or India, but now it's a real deal. It's something really big, and it finally crossed more than half of the global population are part of BRICS, right? And this is something that we really need to understand, that it's really a big deal now. And this is what we were saying, that literally a new monetary system is happening. So a center of gravity of global economy is gradually shifting towards a new alliance. And this is not speculation. This is actually in full swing. It's in full effect. And the new payment system is actually already in place. They have trades up to 1.2 trillion already going through this new BRICS payment system. So it's live already. It's happening, right? So again, in the face of the waning influence of the Western institutions, another bloc is consolidating its power. So they're coming together and working together to enable ease of trade, and also bring demand for their local currencies, and also for their bond markets as well. And this is exactly what it's about. So another thing I want us to highlight here is that, like we said, so the BRICS accounts for 51% of global population, and also it accounts for over 40% of global GDP and purchasing power. So this is a big deal. So out of all the goods and services provided globally, the BRICS nations so far account for over 40% of all of it. And in terms of population, they account for more than half of the population. And keep in mind, this number has potential, major potential to go up, because most, if not all, of these BRICS nations are developing countries, meaning they still have so much room for growth. So this is what we need to take away, right? And now let's go to another one here. And this goes beyond 2025, right? So already 23 countries are already lined up for membership in the year 2025, in this year. So not only are the existing ones there, but there are already many more lined up to join. And this will push, like we said, this number even further. This will bring this percentage of global population even higher, and this will push the global GDP and purchasing power even further. This is currently, but now in this year, 2025, there's 23 more nations that are lining up. And let's look at just a few of them. Like Chad is really rich on oil, mineral, natural resources. Egypt, one of the strongest economies in Africa, right? We all know about the Republic of Congo, the most mineral-rich nation in the world, right? They have everything, all the kinds of minerals you can think of: natural gas, gold, diamonds, copper, oil, everything. They have it. Kuwait is also, as we know, they're actually the first ones to actually have a sovereign wealth fund. They're also a very oil-rich nation. So these are just some of the new members that are lining up to join. And actually, the Republic of Congo is the largest country in Africa, actually, right, in terms of population. So this will push the population numbers even further. And then adding these oil-rich nations as well will push the GDP even further. So we see what's happening here. So these are real, in real time. These are things that are still happening, and these are nations that are still being added onto the BRICS. What does all of this mean? Why are we focusing so much on this? You might ask yourself. It's because of this, right? There'll be a time where, and there is a time right now, where a new monetary system needs to be put in place. And we already see a lot of things happening, and we are often so distracted that we can't see what's happening in real time right in front of us, right? So it's important to understand the impact that stablecoins have and in the global economy, because we are now in a digital world, and with Swift and with BRICS enabled themselves to use the latest technology, the blockchain technology. And as we know, the currency of the blockchain right now that is dominating are stablecoins, and they are by far mostly denominated in the US dollar. So this means that if it comes to blockchain currency, the US is by far still dominating by over 95% of stablecoins are denominated in the US dollar. Why is this so important? It's because also it's so large right now that it's surpassing existing traditional institutions such as Visa, right? So stablecoin transactions have now surpassed the one of Visa. And as we know, Visa is the global leader in payment processing. So stablecoins on chain have surpassed Visa's transactions, right? So the stablecoin native economy is forming a new financial architecture, right? And they're already outpacing traditional services, like we said, in many regions by providing real-time treasury operations and efficient transaction processes using blockchain. So why is this so important? It's because stablecoins now, they're no longer just a crypto niche, but they are the infrastructure layer powering the next generation of global payments. And all of this takes place on the blockchain. And we've not even have clarity yet in terms of regulation. And already stablecoins have outpaced Visa already in transaction. But we are going to touch even more on that as we progress. So in the past year alone, stablecoin market cap doubled. So we see how fast all of these things are happening, especially with the talks of tokenized assets, tokenized commodities, and all of these tokenization talks. The demand for stablecoins will increase even more. They will increase even further. And this is exactly what we need to understand. So even volume tripled, right? And now eclipsing even Visa's network. This is major. Visa is the cream of the cream, right? They're the ones that are global leaders for over 50 years. And now this small industry that is stablecoin is barely 8 years old, and they already dominated and flipped the traditional leader that has been around for decades. This says a lot about the stablecoin. So these are the stablecoins market leaders that we're very familiar with, like USDT Tether, USDC, right? And recently PayPal added as well. But mainly it's Tether and USDC that we are very familiar with. So combined with the explosive growth, like we said, these developments confirm stablecoins evolution, right? Like we said, no longer is it a niche, but now they're the foundational payment infrastructure, right? And stablecoins now operate at the intersection of regulation, financial technology, and real-world usage. This is very important to understand. Regulation is still being put in place, at least in the US. Europe already has MiCA. Asia already has, like Singapore and Hong Kong, they already have well-regulated areas. Switzerland, like we know, they're very pro-blockchain already. They implemented staking, allowed staking products of Ethereum as well already in the markets, so on and so forth. However, the second right here is the technology. This is where the new financial hub is taking place on the blockchain, and it's using real-world assets to do so. So, like we said, let's not just take let's not take this article's word for it. Let's fact check. Let's start with fact checking. Are stablecoins really the real deal, and are they really the ones that are paving the future's financial infrastructure? So let's start by looking at some articles here. So the latest article that just came out just today, as we know, Binance is the global leader in terms of centralized exchange. There is no bigger centralized exchange than Binance on a global scale. And right now they are using USDC as their default currency now for everyone that is using Binance Pay. So if you're using Binance platform right now to deposit your funds from your bank, or you want to send back and forth funds to your friends and family members, enjoy instant peer-to-peer transfers, your default currency will be USDC. It's going to be USDC. This just happened just today, right? So from now on, the largest exchange in the world, their default currency is a stablecoin, specifically USDC stablecoin, to do all your remittance, cover all your remittances, right? This is a major deal, community. So not only is a stablecoin playing a major role on a global scale, but now using the blockchain itself to onboard the largest exchange in the world is also using USDC as their default currency. This is a major step. This is a major deal that I just wanted us to understand. Now, another thing that I want us to also highlight here is that the same chain, Binance, is now also hosting the president's own stablecoin. So Trump not only he started with a lending platform, a DeFi platform, and then he went on and launched his own meme token, and now he's also launched his own stablecoin known as USD1 stablecoin, right? So this is the sitting president right now that is literally launching his own US bonds backed stablecoin, right? And this just shows you where we're headed with this. This just shows you how impactful stablecoins are in the future and how they're shaping, stabilizing the dollar and bringing back demand for the US treasuries, like US debt. So this is great for the adoption. This just shows how much demand that stablecoins are going to bring for US treasuries, and how that in turn is going to stabilize their fiat currency, the US dollar. So we see how two economies, or two alliances, I should say, are building infrastructures independently. On the other side is BRICS. They're busy building and developing their own payment system using BRICS payment system. And then on the other hand, we see the Western side that are using their established SWIFT and are using the established global reserve currency, US dollar, to push stability, bring demand, both for the dollar and the bond market, the US bond market. So now that we've laid this foundation and we have a better perspective in what's happening, let's fact check all of what we've been discussing so far. We've been discussing how important tokenizations are. Stablecoins are the most use cases of the best use case of tokenized assets. In terms of stablecoins are literally tokenized versions of the US dollar. Real world assets such as US Treasury, there's tokenized versions of them as well, in terms of BULLRUN, for example, right? And that's issued by BlackRock. So the tokenization is playing a major role, and tokenizing assets will bring demand for the US dollar. And stablecoins will be required to be backed one-to-one using the dollar, right? Being required to purchase US-based debt. That's very important for us to understand. So to just verify and understand, not just from me or these articles, let's look at what the BIS is saying. This is the Bank for International Settlements. They're based in Basel in Switzerland. This is the lender of last resorts. This is the banks for the central banks. So nations have their central banks, and their central banks are governing their local fiat. But BIS is the bank for those central banks of those nations. So they're very powerful. They're very central. And this is what they are saying, right? So as you see, the title here is that the future monetary system is already in place. So it's just a 2-minute clip. I would like us to just tune in and just listen to what the director of the BRS is saying in terms of what the future monetary system looks like in a nutshell, right? So let's briefly tune in and listen.
The potential of tokenization is to knit together transactions and operations that encompass money and a range of other claims. How can we effectively integrate these elements? One approach is to adopt incremental changes to existing systems, for example, by interlinking them through application programming interfaces or APIs. And this could certainly yield benefits by mimicking some of the functionalities of tokenization. But history teaches us that relying solely on incremental fixes piled upon legacy systems has its limitations. Sometimes a more fundamental rethink is required towards a new financial market infrastructure. And tokenization represents one such opportunity. What is needed is to bring together tokenized deposits, other tokenized assets, with central bank money in tokenized form, and bring all these elements together on a shared programmable platform.
That's all we need to hear, community. And you didn't hear it from me. This is the BRS, director of BRS himself. Let's take away the key takeaways here is that tokenization is the future of monetary system. That's a given. This is not some random influencer talking about it. This is the bank of the central banks saying that tokenization is the future, and that's where all it takes place. And what's going to be required is a central general ledger, which is the blockchain technology, where all these institutions or financial institutions will be tokenizing, having tokenized deposits, like literally issuing their own stable coins, and also having tokenized assets like BlackRock, having tokenized assets like the BULLRUN token. And they need to be programmable, and they should be on the platform that is unifying all of them, bringing all of them together, right? So it's one unified ledger. This is not plural. There is one ledger, not many, just one. And it's going to merge all of these together. And banks and financial institutions are going to have tokenized deposits, and they'll be programmable. They also have tokenized assets. All of these will be built on top of one unified ledger. So now that we understand that, and we heard it from the man himself, right? So let's just briefly understand what is BIS actually. What's their mission? So their mission is to support central banks. What are central banks? Central banks are the banks that actually govern nations, and they are here to govern and the local fiat currencies and to make sure that it's stable. And so this is the bank that supports central banks in pursuit of monetary and financial stability, right? Through international cooperation and so on and so forth. So, and to act as a bank for central banks. So BRS, they are the banks for central banks. So they're the lenders of last resort, and they're the ones that literally have a major influence. And they are saying that the future of finance is tokenized assets. In particular, real world assets, tokenized assets. Tokenization is the future. And also it should be programmable, and it should be all under one ledger, right? So now that we know that, let's move a step further. All that what this director of BIS just talked about has already been built last year in March. It's been already around for more than a year. So he wasn't talking about something that in the future, maybe sometime it might come. This is something that is already in place. Visa is actually introduced this more than a year ago. This is back March 10th. It's been around already. So Visa had introduced tokenized asset platform. Exactly what the Bank of International Settlement is talking about is the future of finance. It's at the core of everything. And there should be one unifying ledger for all that to take place. So which ledger are they talking about? It's right here. It's the public Ethereum blockchain, the ultimate ledger. One ledger. And it's Ethereum. This is where the Visa tokenized asset platform is in place. And it's a new product that helps what? Banks issue fiat-backed tokens. Exactly what the BIS was talking about. And this infrastructure is already built. It's already here. It's already on the one public ledger on the Ethereum blockchain. So to understand this, Visa is a global leader in digital payments, right? And it's helping to bridge existing fiat currencies. They don't have to reinvent the wheel. They're using existing fiat currencies. And then they're just helping that they can use blockchain, right, through this Visa tokenized asset platform. So if you're a central bank or local bank, use their existing platform, use your existing fiat, bridge it over to this platform, and then you get a new product designed to help financial institutions issue and manage their fiat-backed tokens on blockchain. This is exactly what the BIS was talking about. This is exactly what the BIS was talking about. So another thing I want us to understand, they have 15,000 financial institutions, like we said, in 200 different countries. And all of them will be enabled, which are their banks and financial institutions, to issue and transfer fiat-backed tokens over blockchain networks. This is what they're going to be able to do. And Visa is not just some fly-by-night, but they've been around for nearly 60 years. And they've been always at the forefront of digital payments. So they're the market leaders, like we know. And they're very excited to leverage their experience with tokenization to help banks integrate blockchain technology. Isn't this exactly what the BIS director was talking about? And all of these are taking place under one ledger. It's a public ledger. It's on the Ethereum blockchain. But don't take my word for it. Let's look at another article. So this is now Van Eck. Van Eck is a competitor of Fidelity, of BlackRock. They are one of the largest asset managers. So one of its executive is talking about Swift. Remember we talked about how BRICS is building on blockchain technology? Swift is not just going to sit around and turn around and take the loss. Swift has been busy partnering with Ethereum as well. And they're using Ethereum as their use case. And let's read even further. Let's get some more details. So Swift's vision for digital and tokenized assets integration. So all these things that the BIS is talking about, Visa, MasterCard, Swift, BlackRock, JP Morgan, UBS, they're already implementing all of this. The infrastructure is already in place, including Swift itself. They're using this digital ledger technology to use tokenized assets and integrate them. So founded back in 1973. So like we say it again, they're not just launched last year or last weekend. They've been around for over 50 years. And same like with Visa and MasterCard, Swift also operates under an organization owned. So they have members, and the member is 11,000 deep. So they have 11,000 members worldwide, and mostly, of course, they are banks. And what's happening here is that the growing influence of digital currency and tokenized assets has pushed SWIFT to take steps towards integrating blockchain technology into operations. So this is what we're talking about. So a 50-year-old institution that has 11,000 members worldwide and mostly banks, they are using the blockchain technology. This is what it's about. It's not about flipping meme coins and trading coins. It's about using the technology. That's what it's all about. And finding solutions using implementing the blockchain technology. This is what it's about. So what is SWIFT using? Ethereum plays a key role in SWIFT's experiment. Now let's hear what Matthew is saying. Who is Matthew? He's the head of digital assets at VanEck. This is what he's emphasizing. He's emphasized that the connection between SWIFT and Ethereum. He noted that Ethereum is the only blockchain, the only. Same with the Swiss. Ethereum is the only blockchain mentioned in SWIFT's communications regarding its digital asset integration plans. That's it. Nothing else. Just Ethereum. That's it. So we saw that BRICS is using blockchain technology. We saw that Visa, MasterCard, JP Morgan, UBS, BlackRock, they're using Ethereum. SWIFT, the largest payment processor right now in the traditional market, is also only using Ethereum as well. So what is all of this telling us? To answer that, we need to look at this data. This is a beautiful website known as realworldasset.xyz. This shows you, this is a website where every tokenized real world asset is in one place. They keep track, they use this data, this information to keep track on the current real world assets, tokenized assets. So if we go, let's start with stablecoins. If we look at stablecoins right now, and what are we looking at? We're looking at which platform are stablecoins mainly on. We see that Ethereum is the leader by far, right? So Ethereum here in blue has the most stablecoins, which are, like we said, digital tokenized US dollar. Let's go now to treasury bills, tokenized treasuries, right? If we look at tokenized treasuries, the results are even more obvious. If we look at in blue, where are the majority of tokenized assets? Let's understand something here. Out of almost 6 billion in tokenized treasuries, right? Let's round it up to 6 billion. 4.3 billion are on Ethereum alone. So let's understand that. What we are looking at right now. So if it comes to tokenized stablecoins, as tokenized US dollar, it's on Ethereum mainly. Tokenized treasuries, it's on Ethereum as well. If we go to bonds or even commodities, we'll realize it's on Ethereum, right? Let's look at bonds, for example. Commodities, same thing. Mainly, actually, it's even clear. Commodities are even more. It's literally 99.9% on Ethereum. So if you look at stablecoins community, if you look at treasury, tokenized treasuries, if you look at commodities, if you look at even stocks, these are the 4 assets right now in the real world. They're all being traded on Ethereum. They're all right here. This is what we need to understand. So everything that is tokenized, be it stocks, commodities, US Treasury, stablecoins, are on Ethereum. SWIFT is on Ethereum, exclusively working on Ethereum, working with Ethereum. So let's move now to DeFi. Let's bring this point home. if we look at DeFi community, and this is a beautiful chart that just shows you, just to clarify, in orange, it's centralized exchanges. The orange is are centralized exchanges, and the one in black are DeFi, decentralized exchanges. So as you see in the early days of 2018 on the far left, there was literally no DeFi activities whatsoever. It started picking up, and then right after the 2021 last bull run, it started dropping again. And then in the early first quarter of 2023, it started picking up. And as we are today, 60%, more than 60% of all lending and borrowing DeFi activities are taking place on decentralized applications, not on centralized exchanges. So DeFi activities are more than on Coinbase, Binance, Kraken, and all these crypto.com and all these major centralized exchanges. They are literally more on DeFi. So what does this tell us, community? It just encourages and it just highlights and proves once more that DeFi is literally taking over. All the lending and borrowing activities, the staking, yield earning, all of these things using the blockchain technology, smart contracts, trustless, are taking place in on decentralized exchanges. And these are mainly on Ethereum, because that's where most of the stablecoins are. Like we said, most of the real world assets that are being used as collateral for the lending platform. And this is exactly what's happening right in front of us. So right now, community, what we need to understand, and the takeaway of today's session, is for us to understand what market leaders are doing. And how can we understand if we're not informed? And all this information is public information, right? It's a quick research that you can do, and then you see they even have our YouTube channel here you can subscribe to. Actually, let me subscribe right now, right? You can subscribe to them. They're telling you everything. It's right in front of us. It's a blueprint. They're even calling it a blueprint. They're telling you it's a blueprint what the future monetary system will look like. It's tokenized, it's programmable, and there's one unifying ledger. And if we move further, they tell you what it is. Where is that ledger? It's on Ethereum, right? That's where it is. What about Swift? Where is their unified ledger? Also on Ethereum. What about Visa, MasterCard, JP Morgan, UBS, BlackRock? They're all on Ethereum. So let's not be carried away with the prices, but let's understand that the blockchain technology is about fundamentals, building infrastructures, and not just price go up, market cap go up and down, and price fluctuate. But there's no substance, there's no fundamentals. This is what gets a lot of people, a lot of traders specifically, in trouble. Like we've just seen earlier, we saw how one specific, what was it called? One specific, one specific, we saw what happens in the last 7 days, right? This was all over the news. We saw what happened with when VCs are the ones taking over. And if you look at fundamentals community, this is so important. It's a quick fix that you can see. You come here and then you see what is the supply, what's the max supply. This is an infinity sign, right? This is an infinity sign. This just means that there is no max supply. They have unlimited supply. So once you see this, you have to dig deeper. Go to token unlocks. Once you come to token unlocks and you do more research, you'll see that they still have 46.5% of the total supply locked, which, keep in mind that max supply is unlimited. But the ones that they're giving out is locked, and they only have 51 unlocked, and the 51 unlocked, majority of it, actually almost all of it, are given to the team, right? Or the mantra team associates, and that's where the majority of it goes, right? And then once the VCs, the early investors, have received enough exit liquidity, then they're cashing out, right? They're cashing out. And as you see, this was at a 3.6 billion market cap, and just within minutes, it dropped all the way down to 430 million. So why are we pointing this out? Is because many are just carried away with pumps, with prices going up. So when the prices are going up, people are FOMOing, right? Many traders are just jumping into the bandwagon without actually doing proper fundamental analysis. Does the tokenomics make sense? This is why we focus on the 4 challenges we always talk about. Inflation. Having unlimited supply, it causes inflation. Having a staking platform and having unlimited supply, that's inflationary. So smart money decided that we're not going to stake an inflationary token that has no unlimited supply. Let's get our money out right now before it gets too inflationary. And this is exactly what happened. So these are things that are public information that we can really come and do our own research and find these things out. So what is important, understand, is this project part of a solution or is it part of a problem? Does it address the 4 challenges in the industry, with one of them being inflation? What about liquidity? That's another challenge. What about stable staking distributions, sustainable staking distributions? And then the final one is using your volume efficiently. So what's the point of having billions of dollars in volume if it doesn't do the community any good, or the ecosystem itself? What's the point? You want to be able to use this volume efficiently. And just to make an example, and we are closing out with this example, let me just go to the lowest one. So scrolling down, just getting a random one. So let's use 500,000, right? Let's use 500,000 for the sake of math. Let's understand what it means to have a sustainable tokenization, right? Having sustainable mechanisms. What does it take to be sustainable? So in order to be sustainable, you have to implement certain criteria, certain mechanisms using the blockchain technology. So just to use this as a point of reference, let's take that, instead of taking 500 million, let's take just 100 million, right? In trading volume, and look at what our ecosystem does with that trading volume. Before we get there, let's summarize the challenges. So in the industry we are in right now, we have 4 different challenges. The first one is inflation. What's your max supply? Do you even have a max supply, or do you have unlimited supply? And if you're a proof of stake, meaning you have a staking platform, your inflation is going to cause more harm for the stakers. So the second thing you have to ask yourself, well, at least, is there enough liquidity? Are there mechanisms in place to retain it? That's the second challenge. And then you having a staking platform, are the staking distributions even sustainable? Have you just allocated a certain percentage, and when that percentage runs out, it's over? Or do you have a sustainable staking distributions that will never run out, can't run out, based on your tokenomics and fundamentals and smart contracts? And then finally, like we're doing right now, are you using your volume efficiently? So let's just do some math here. Let's pull out the calculator. We said we'll just take, for the sake of example, we're taking 100 million, right? This is volume, daily volume, 24-hour volume. So if this would be the volume of BRL right now, we would multiply this by 1%, right? This is 1%. So 1% of 100 million is 1 million. So what does that mean? Let's come back here. So this is banning. This is addressing the inflation challenge. One of the 4 challenges is inflation. We have a true ban. What is a true ban? We started with 1 million in total supply. 1 million. Now, if we go to Etherscan, this is where you don't have to trust. You can verify for yourself. You come to Etherscan, you go to, you see our max total supply. It's not unlimited. It used to be 1 million, like we said. We started with 1 million, but look at where it's at now, right now, 962,000. So this means that our supply is actually scarce. This is what you call scarce. Scarce means the supply keeps shrinking. For a staking platform, this is vital. This is very important. You don't want to cause inflation. If you cause inflation, this is what's going to happen. Did we see what happens if you're causing inflation? If you're causing inflation, you are putting fear to your stakers. And when your stakers are fearful, what do? They dump. Because it's survival of the fittest. Nobody wants to be left with the bags, holding the bags. So they are on a race to dump, to sell off, because they are threatened by the inflation that is happening. They see that there's unlimited supply. There's still half of it unlocked. And then majority is held by the team and the early birds. So this causes fear and the market starts dumping. And this is what happens. So to address this, you need to ensure that you not only have a max supply, but you have a supply that is actually being reduced. And this is what true ban comes in. And then we have LP. LP is, like we say, this is addressing liquidity challenge. You need to retain liquidity. So using your volume to retain liquidity, this is exactly what this smart contract is here to do. So with every trade, 3% goes towards adding liquidity into the liquidity pool. So now we have points that address inflation. This addresses liquidity, and now this addresses sustainable staking distributions. We are, if you stake your BRL token based on the volume, you receive USDC, not BRL tokens. You receive USDC distributions. And because it's based on the trading volume, it's in perpetuity. So as long as there's liquidity and volume, there'll be unlimited supply of USDC for the stakers. This is how you use your volume efficiently. So having this, this is how now it comes in, we make the example. Let's do the math now. So 1 million is for 1%. 1% of 100 million is 1 million. This means that 1 million worth of BRL tokens in dollar terms are going to be burnt and removed from the total supply, from the max supply, like we see is happening here and is been happening here. So far, we've burnt more than 37,000 BRL tokens and removed them from the 1 million total supply or max supply. Now, with every trade, this supply just keeps shrinking. So let's move on further. Another 1 million goes towards staking. This is where USDC, $1 million worth of USDC goes towards the staking platform, staking contract. Let's also look at that. So many are unaware. Many come to the Etherscan and they see like, oh, what's this wallet with 73% supply? This is not a single person's wallet. This is a smart contract, as we are seeing here. This is a smart contract. It's a contract. It says it right there. It's a smart contract. And this smart contract accumulates USDC with every volume, with every trade. It's accumulating USDC for staking. Those who stake will receive this USDC distributions. So this smart contract captures the USDC as the volumes are going through. It's a smart contract. And this is how it's addressing it, right? All these three are smart contracts. TrueBan is a smart contract. LP is a smart contract. USDC distributions, this is a smart contract as well. And they're all triggered through volume. So if you have liquidity, you trigger volume. And if you have volume, you start banning your supply and removing them from your total supply. You retain more liquidity. You accumulate more USDC for the stakers. Now you have a sustainable and efficient ecosystem, meaning that the more people adopt it and trade and use it, the more liquid it gets, the lower the supply, and the more USDC distributions for those who decide to stake. It's a win-win-win for everyone. Now, another thing that we need to look at is that liquidity now. Liquidity is 3%, not one like for the banning and for the USDC. So we will have to come back to the calculator and multiply the 1 million by 3. So that means 3 million. So out of 100 million volume, this means that 3 million will go towards liquidity. This will go towards the liquidity pool. 3 million in just 24 hours. Now, let's take this further. Let's say we don't want to just calculate for 1 day. What about for 1 month? So times 30. This puts us at 90 million. So within a month of daily volume of 100 million will put us at 90 million in liquidity. This alone will put us as the most liquid community token already in the space within 1 month. But now let's say, why stop at 1 month? Let's say we have 365 days in a year. So let's do it 12 months. It will put us at $1 billion. We'll be at $1 billion right now in liquidity. This is just liquidity alone. So this will put us at 1 billion in liquidity. It might not tell us much. So let's put it into perspective. If you have $1 billion in liquidity, let's look at where we at when you have $1 billion in liquidity. So right now, the largest cryptocurrency with the over 60% market share, known as Bitcoin, has on the centralized exchanges has a 1.5 billion in liquidity. You see it right here. After 16 years, Bitcoin had, and all the ETFs and all the options trading and all these things that are happening, and not 100 million in volume, but 21 billion in volume. They managed to have put together 1.5 billion in liquidity. And the math we just did with only 100 million, within a year, we will have 1 billion in liquidity. So rivaling Bitcoin, the largest cryptocurrency by over 60% market share. But let's not compete with the best of the best. Let's take the second best, right? So let's take the second best. Let's go to Ethereum. Let's see how much liquidity Ethereum has. So on centralized exchanges, liquidity of Ethereum is at 661 million. This is million. So within a year, community, we would have almost double the liquidity of the largest smart contract blockchain, Ethereum. More than 300 million more liquidity than an entire blockchain. So this is just to show you how our ecosystem is efficiently retaining liquidity and how important it is and how it's going to be so significant for us. And if you have $1 billion in liquidity, obviously you'll have a lot of volume, trading volume going on. You'll be stable and you'll attract a lot of stakers and traders. And this is exactly the point. And the more traders are coming in, the lower the supply, the deeper the liquidity, and the more USDC are being accumulated. This is the type of platform we want or need to be part of, especially now that we understand what the agenda of the BRICS is, right? The agenda is to tokenize everything. They are the banks of the central banks. Tokenization is the future of finance. It's the new monetary system. And all of that is taking place on one public ledger. And that public ledger is known as Ethereum. These are not my words. These are Visa's words, right? This V's are saying it, doing it, not just talking about it, doing it. These are not my words. This is SWIFT, the largest interbank communication system, payment system. SWIFT. They are, like they said here, he noted that Ethereum is the only blockchain mentioned in any SWIFT's communication in regards to digital assets plans. If it comes to digital assets, the only blockchain that is being mentioned in all communications of SWIFT is nothing else but Ethereum, right? So this is just to show us where the liquidity is coming home to. It's coming home to Ethereum. So if you have a platform that is not retaining liquidity, is not addressing the 4 challenges, is not efficient and sustainable, you're going to miss out. You're going to miss out on this liquidity rush. And this is not what you want. You want to be part of this liquidity rush, and you don't want to be left behind. So community, this is the session for today. I hope the message came across. And this is what we're all about, to cancel the noise that is happening around us, and to uplift, encourage us, and so that we focus on what really matters, right? We really want to focus on the fundamentals, on what matters. And the reason why we focus so much, community, on fundamentals is because we have no need to be talking about price. Because if you focus on these 4 challenges, price will take care of itself. Staking percentage will take care of itself. Liquidity retention will take care of itself. You only talk about market cap and price if you have no fundamentals. There's nothing else to talk about. So all you talk about is speculating on your price. Well, we are the opposite. We focus on the fundamentals because we are heavily into fundamentals. We developed a platform that is literally addressing the 4 challenges in the entire industry. So why should we waste our breath on price and speculation? If you're addressing these 4 challenges, the natural thing is that the price is obviously going to move up. So why spend our efforts and time to talk about something that is obvious if we need to educate the community that it's about the technology, it's about the fundamentals. It's not just about trading meme coins and watching green candles, but it's about developing something that is part of a solution, addressing the challenges in the industry. This is why we stress so much on education, on having these various sessions on a daily basis, throughout the week, throughout the month, throughout the year, consistently. We want the industry and the community to understand the importance of tokenization, of blockchain technology, of monetary system, how it works, how it needs to be addressed. What's the challenges that we are faced with? How are we addressing these? Are we part of a solution? Are we the problem? Ask ourselves these questions, challenge ourselves. The more we understand how monetary system works, how inflation affects interest rates, how interest rates affect liquidity, boom and bust cycles, we'll be able to embrace our ecosystem, because we'll be able to identify that this is the ecosystem that is addressing these challenges, these solutions. And if you're addressing these 4 challenges, you don't have to worry about price. You don't even have to speculate about it, because you ask yourself, if this ecosystem is using its volume efficiently to keep banning its supply, that is only 1 million to begin with, and it's already banned 37 million in supply, and they keep retaining liquidity 3% with every trade, and we just did the math, within a year, having 100 million in volume, they'll be at 1 billion in liquidity, surpassing Ethereum and rivaling Bitcoin in terms of liquidity. And then they're accumulating stablecoins, USDC, for the stakers, which these stakers can use to either compound or load them up on their crypto.com cards or Binance cards or whatever the case may be to use in the real world, or keep compounding. Now you have yourself a platform, an ecosystem that is part of a solution that is efficient, sustainable, and is using the blockchain technology to its fullest potential to empower its community. And it's doing so by even educating the community about how monetary systems work. This is it for today, community. Let's get to your comments. Let's see what you have for us today. So before we get to the comments, the new monetary system is already here, community. It's not something that we wish is going to come in the next decades. It's already in full effect. It's in place already. Be it Swift, be it MasterCard, Visa, JP Morgan, BlackRock, UBS, they're all already on Ethereum. The BIS has actually laid a blueprint. They titled it a blueprint, right? So there is a blueprint of the future monetary system, and it's through tokenization. And all tokenizations are taking place on Ethereum, be it through stablecoins, real-world assets, whatever the case may be. That's the home of DeFi. So let's get to your comments. Queen Debbie says, greetings to you, community. Greetings to you, my brother Steve, and our beautiful Queen Mother Wino. I can't wait for this empowering session. Thank you so much, Queen Debbie. We appreciate your feedback. Always a pleasure to see you in the community. We want to appreciate you for you and Queen Val always hosting Wednesdays Facebook sessions. You're doing an amazing work, bringing awareness on Facebook, teaching about the blockchain industry, the blockchain technology, highlighting the challenges we faced in the blockchain industry and how our ecosystems are actually addressing these. You're all very much appreciated, Queen Debbie and Queen Val, for hosting those sessions, and also Fridays and Sundays being available, always available consistently to also assist, not just assist, but lead and direct and moderate the Queen sessions as well. So thank you so much for all the efforts you're putting in. We have Queen Lati says, takes over, the world over is changing, and let us embrace these technological developments. Take us on, King Steve, and may God continue to guide and bless you in everything you do. Beautifully said, Queen Lati. You know, just like it was in the early 90s, many were left behind thinking that the internet is just a fad, it's just something that is going to fade out within the next week. And fast forward today, it's been only being built on top. And those who didn't embrace it, didn't take the time to study it, learn it, know how to function, take advantage of it, be part of a community with it, lost and were left in the dust. But those who found solutions, those who saw it for what it really is, are the market leaders of today. And one thing I always like to highlight is that the internet was just that. It was the internet, it was a technology. But the difference is what we've just discussed today for the last 1.5 hours is that Ethereum is not just a technology, it's an asset also. So Ethereum is a technology that Swift is using, Visa is using, MasterCard, JP Morgan, BlackRock, UBS, they're all using it. It's a technology. At the same time, it's an asset that you can borrow against, use as collateral. You can stake and earn even more of it. And it's deflationary. The more volume it gets, the more deflationary it becomes. There is nothing like that. There is no other layer one blockchain with embedded functions like that, functionalities like that. And then by the end of the month, later this month, there'll be an upgrade as well, Spectre upgrade as well, making staking more efficient, enabling wallets, right? Crypto wallets to be smart contract enabled, meaning that now your host can, for example, be paying your transactions for you, or you can build more products within your wallets as well. So there are so many things that are still in development and that will be launched out later on this month for the Ethereum. Let's beautifully say it, Queen Lati. Queen Alice says, greetings to our King Dev Steve and our Queen Mother and BULLRUN family. It's another great Thursday. Looking forward to an amazing session. Wishing you all a wonderful and blessed Easter. Thank you so much, Queen Alice. We appreciate you very much for taking your time and being part of these sessions consistently. We appreciate you very much, and we hope that you are able to take away something from today's session. Great brother Theo says, greetings, my great brother Steve, dearest great Queen Mama Wino, and my epic BULLRUN family. This session regarding the new monetary system with our professor is sure to be fire. Thanks as always, great one. Thank you as well, great brother Theo. We appreciate you very much for always being part of these sessions consistently. You are very, very much appreciated. We have Queen Patricia here as well. Says, good evening, family. Glad to be here again to listen and learn from the great teacher, Mr. Steve. Thank you, Steve, for your commitment. Stay protected and blessed always. Thank you so much, Queen Patricia. May you also stay blessed and protected. We appreciate you very much for your consistency, for always showing up in these community events, being so active on various social platforms. You're very much appreciated, Queen Patricia. Then we have none other than Queen Val. Says, hello, Bull Runners. Happy Thursday to all of us. So excited for yet another session. Glad that you showed up. We appreciate your consistency, Queen Val, being on Zoom every single day, also hosting the Facebook live on Wednesdays with Queen Debbie together, and then also being a major part of producing all the most of the banners on a daily basis for the tweets, and so much more. We appreciate your consistency, your efforts, your leadership. Very, very much appreciated. Also, community, if you're not part of our community yet, here are the links to Survivor, BULLRUN, Killer Whale right here that Queen Val already laid out for us. We are a very, very active community on a daily basis throughout the week, throughout the month, throughout the year. We are very, very active. So we encourage you to be part of these sessions. Just to do yourself a favor and to be informed and up to date on the current events, what's happening around us, right? We are here to encourage, uplift, and have a platform where we can socialize, interact, and find our footing in this very dynamic industry that is very sentiment driven, where just one tweet can send the markets to all-time highs or send them to all-time lows in a split second, right? So in order to keep our sanity, it's so important to be level-headed, and level-headed comes with being informed and educated. And that's what we take pride in as a community. So feel free to join our platforms to be part of our community. So Queen Beatrice says, happy Thursday, family. Greetings to our Queen Mother and our Professor, Brother Steve. Thank you for consistently informing and educating us about our crypto industry. Be blessed always. Thank you so much, Queen Beatrice, for your well wishes and encouraging words. May you also be blessed. We appreciate you for your consistency as well. And the community really, really appreciates your efforts, your leadership, your consistency. You're very much appreciated. And we hope that you are able to take away something from today's session. Queen Marilyn says, enjoying the session. We appreciate your feedback. We're glad that you are able to take away something from today's session, Queen Marilyn. And then we have none other than Queen Mother Wino herself, says, greetings to our awesome family. Another opportunity to be educated, informed, and inspired. Knowledge is power. Happiness doesn't result from what we get, but from what we give. Thanks, Steve, for all. Thank you so much, Mom. Beautifully said. And you are a leading example by that as well. We appreciate you for leading by example. You're here every single day with the tweets, together with your daughter, Queen Val, putting all these efforts for us to be able to also do our part and at least engage with the tweets by just simply liking, retweeting, and commenting on it. So your efforts are very much appreciated. Also with the Queens every Friday and Sundays as well. Very, very much appreciated. Thank you very much, Mom. Then we have Uncle George. Says, greetings to Steve, Mama Wino, and the BULLRUN community. Enjoying your update on the new monetary system. We're glad that Ethereum is building infrastructure to make it more efficient. Beautifully said, Uncle George. Beautifully said. There's really nothing much to add to this. Indeed, that's what the difference is. Go where the infrastructures are being built, right? You need the infrastructures. The infrastructures that are being built are not built from just random individuals or institutions. These are market leaders. These are monopolies or duopolies. These are well-regulated institutions that are traditional and have been around for decades. They are the ones establishing, building, spending billions of dollars in building all these infrastructures, and they choose one public ledger, and it's called Ethereum. So well said, very, very true, Uncle George. And we appreciate you for consistently showing up and being part of these sessions. We appreciate your leadership as well. Queen Matafeni says, greetings, Professor Steve. Wonderful and inspirational presentation. Very lucid and insightful enough to hold on to. Thank you so much for your feedback, Queen. We are very much appreciated, and we are glad to have you here with us. We have not to be named. Steve, what are your thoughts on our current crypto bull run 4-year cycle? What do you think will happen to the current meme coin market on the Ethereum blockchain? Let's dissect that. So let's start with the 4-year cycle. Beautiful question. Obviously, now in hindsight, we see that this is every bull cycle so far, and this is the 4th one. Every bull cycle prior to this one, we've always been saying that, oh, this time is different, but it hasn't been different. It's been really following the 4-year cycle up to last bull market cycle in 2021 to the date. However, this time it's really been different, right? The 4-year cycle is really taken off track right now because it should have been already. But due to all the, starting with last year, January, with all these ETFs that came in, with the new regulatory clarity that are about to kick in, and also with the previous SEC admin that was literally suing the socks off of everyone that has anything to do with the proof of stake blockchains, like Consensus was sued, Coinbase was sued for offering staking, Kraken as well. We know Uniswap was even sued, and so on and so forth. So many applications were sued, and this really put a big break on developers, and a lot of migration took place right out of Ethereum. But now, as we see, DeFi law, the first law that the president signed into law was to enable DeFi to take place, right? And it's not considered, it's taken out of the radios from the IRS, and it's not considered a brokerage. These are the steps that are being taken in order to put regulations into law, and regulations are here mainly for DeFi, right? Everything that has to do with staking, with stablecoins, with real world assets, with DeFi and general lending, borrowing, with wallets, take place on the largest blockchain, smart contract blockchain, Ethereum. And these are the things that needs to be untangled and are taking shape right now. So 4-year cycle, this time it's literally different. And in hindsight, we can see that it's obviously different, and it's taking shape differently. And what we're waiting for right now are the more clarity in terms of regulations. And like we saw in today's session, institutions already spent hundreds of millions of dollars to build all these infrastructures strictly and exclusively on Ethereum. Be it Swift, like we saw today, be it Visa and MasterCard, be it UBS, be it BlackRock or JP Morgan, they build the infrastructures on Ethereum. And this just tells us that it's a matter of clarity. It's a matter of regulation. It's a matter of the laws of real world assets, tokenizations, stable coins being put in place, and then we'll finally realize the boom, the bull market that we're so yearning to go through finally. And to your second question is what I think about the current meme coin market. Like I said, fundamentals always win. Memes are fun and good for the short term. However, the fun ends when rug pulls come in, right? When scams, and majority of these coins, obviously on pumped on fun, unfortunately are scams, right? They don't have any fundamentals. They have pumpamentals, but they don't have fundamentals, right? They lack these four challenges that we always talk about: the lack retaining liquidity, the lack addressing inflation, the lack sustainable staking distributions, if they even have staking platforms, and they're not using their volume efficiently. They're not developed with good intentions to last beyond a hype, right? But this is exactly where we face the challenges of we're faced with in this industry. We should start building, developing applications that have longevity, that have sustainability, that are efficient, that are focusing on the blockchain technology, that go back to the essence and the fundamentals of why blockchain was developed 16 years ago in the first place. It came out of a crisis, out of a housing bubble. And we shouldn't be jumping from a housing bubble into a meme coin bubble, right? But we should be smarter. We should know better. And that's all I can say in that regards. And that's my personal opinion, right? Not financial advice. So that's all I can say for now. I appreciate your feedback and your question. And then we have Queen Sindiso. Good evening, family. I am happy to be here listening to Steve. We appreciate you for taking your time and being here with us today. You're very much appreciated, Queen Sindiso. And then we have great brother Theo again. What an absolute phenomenal session, putting this one on loop. And as always, thank you for continuing to educate, inspire, and empower us all. You are so very much appreciated, great one. Thank you so much, great brother Theo. You are also very, very much appreciated. We appreciate your well wishes, your kind and encouraging words, and for you taking your time and being part of these sessions so regularly, so consistently. May you and yours stay safe and healthy, and so does the rest of the community. I wish you all a very, very wonderful and rest of your week. I want to take the time and appreciate you all for your resilience, for the participation, for your consistency. This is what it takes. We read today, I should say, we tuned in and listened today what the Bank of International Settlement is saying. They have a blueprint laid out for us. They're saying that the blueprint is tokenized assets. Tokenization is the future of monetary system. And tokenized assets, real world assets, and stablecoins in a smart contract blockchain that is programmable and on a public ledger. That's where it's at. And if you look at SWIFT, if you look at UBS, even the Swiss National Bank, the Swiss government, if you look at BlackRock, JP Morgan, Visa, MasterCard, they're all building on Ethereum. That's where DeFi is taking shape. So let's ensure that we are ready for that. Let's not fall for the price and volume and the market caps, but let's look at who is building where. Where are things being built? Where is the infrastructure being built? Where's the money being spent and invested to build infrastructure? That's where we should go. Follow where the money goes. Follow where the market leaders go. And the market leaders are the Visas, the MasterCards, the UBSs, the Swiss National Bank, the SWIFT, the BlackRocks, the JP Morgans. These are the giants in their respective industries. And when they choose Ethereum, and if Ethereum is good enough for them, Ethereum should be good enough for us, right? With that said, community, I want to wish you all a wonderful, wonderful rest of your week. And tomorrow for the Queens, I wish you a wonderful, wonderful session of empowerment and uplifting, as you always have. And for the rest of the community, hopefully by latest on Saturday, let's meet again. Looking forward to these sessions. With that said, have a wonderful rest of your week, community. You're all very much appreciated. Let's stay focused. Let's stay hungry. Let's cancel and tune and mute all the noise around us. Let's look at things for what they really are. Let's be critical, including to what I am even saying. Use these sessions as a point of reference, right? And let's encourage ourselves to think critically. Let's not take everything by its face value, but let's verify, right? That's the beauty of the blockchain technology. Community, we appreciate you. Stay safe, stay healthy. Till we meet again. Bye-bye, everyone.